XRP's recent price action has become increasingly fraught with bearish signals. After surging to a multi-year high of about $3.66 in mid-July, XRP has reversed course sharply, trading roughly 23% below that peak by late August 2025. On the technical charts, a descending triangle pattern has now fully formed on the daily timeframe. This pattern, characterized by a flat support line and a downward-sloping resistance trendline, turned distinctly bearish when XRP broke below the critical $2.95 support level. Once that horizontal support was violated, the classic measured move from a descending triangle pointed to roughly an 18% drop from them current prices, or about a $2.40 target. In other words, if the breakdown plays out, XRP could sink toward roughly $2.40 in coming weeks. Importantly, this scenario assumes nothing else intervenes. Indeed, if bulls manage to hold key levels, the bearish case would fade. Analysts note that reclaiming the $3 area would undermine the triangle's bearish implications. In fact, prior times when XRP cleared back above $3 in mid-July and early August, the coin quickly rallied 25% and 15% respectively. Thus, the first risk is clear. A confirmed break of the descending triangle support portends continuation toward $2.40. The mitigating factor is psychological. If market participants see $3.13 as strong support as some technicians do, then buyers may step in and cap the downside. Several analysts indeed highlight that the $3.13 $3 area is key. A hold here could form a floor, whereas a decisive break below could invite deeper correction toward $3 or lower. In summary, the charts warn of fresh lows if $3 is lost, but they also imply that a successful defense of that level could trigger a countertrend rally of significant size. The second bearish signal comes from momentum divergence in the XRP markets. When comparing XRP's performance against Bitcoin, the XRP-BTC pair, and its RSI indicator, a classic negative divergence has emerged. Concretely, from July 10th through August 18th, XRP's price versus BTC formed higher lows, suggesting a modest uptrend. But the relative strength index slid from overbought levels 75 down to the mid-40s, making lower lows. This mismatch rising price floors, but falling RSI, typically signals that buying momentum is waning. In practice, it means larger hands may have been booking profits into the rally, and new buyers are reluctant at higher prices. Continued divergence often precedes a rollover, as sellers eventually take control when bullish enthusiasm fades. In line with this, some traders warn that if the XRP-BTC pair falls through support around 0.0002452, 0.000250 BTC, a zone reinforced by the 200-day moving average, XRP could extend its downtrend further. However, divergent momentum can unwind quickly if market conditions change. If Bitcoin itself were to enter a new leg up, or if regulatory clarity sparks a fresh wave of inflows, XRPs or SI could recover along with price. Indeed, some analysts still point to structural upside in XRP, for example. One market veteran noted that XRP successfully broke above an extensive resistance channel and is now eyeing a double-digit target, implying that the current weakness might only be a pullback within a larger uptrend. Moreover, broader crypto sentiment is closely tied to Bitcoin. Historical data suggests that XRP has sometimes rallied sharply. When BTC and ETH surge is hinted in Mitogast when Bitcoin hit new highs and altcoins caught up. Thus, if the overall market picks up and XRP reclaims resistance around $3.27, $3.30, or the triangle's upper trend line, the bearish divergence could be rendered moot. In short, the current RSI divergence flags a risk of continued weakness. But it is not an ironclad death sentence. It can be offset by renewed bullish flows, such as a Bitcoin-driven altcoin rotation or big news that shifts sentiment. A third concern comes from on-chain activity metrics, which have turned decidedly negative. Data from on-chain analytics firm Glassnode reveal that XRP's network usage has collapsed in recent months. Daily active addresses, a measure of unique users transacting XRP, fell from a robust 608,000 on March 19, 2025, to only about 33,000 by August. Likewise, daily transaction count has plunged by about 51% from 2.5 million in June to 1.25 million. Now, in blockchain markets, such declines often portend stalling prices. Lower participation usually means less liquidity and less buying pressure. Cointelegraph notes that historically, declines in network activity typically signal upcoming price stagnation, as lower transaction volume reduces liquidity and buying momentum. In practical terms, these on-chain trends suggest many users may be sitting out the rally, possibly because they recently took profits or shifting interest to other assets. Such a pullback in genuine usage adds weight to the technical sell signals. It is hard to stage a sustained rally when on-chain engagement is drying up. On the other hand, on-chain drops can exaggerate during corrections. Some of the decline in active addresses might simply reflect normal profit-taking or transfers off on ledger solutions. For example, Ripple has been busy deploying new features, an EVM-compatible sidechain for XRPL, an official stablecoin, RLUSD, and CBDC pilots. These shifts could divert some transactions off the main XRP currency or onto sidechains, temporarily depressing the DA count. Furthermore, such on-chain metrics often lag fundamentals if price rebounds. Addresses and transactions typically recover. There are also still hundreds of institutions connected to RippleNet, and billions flowing through its on-demand liquidity rails ODL. CCN reported that by 2025, over 300 banks in 70 countries were using RippleNet, with some estimates above 1,000 worldwide, which undercuts any narrative that XRP's utility is dead. In addition, major partnerships American Express, Bank of America, Santander, Standard Chartered, and others continue to integrate Ripple's settlement tech. These positive fundamentals, rising institutional adoption, real-world usage remain in place, even if the on-chain numbers dipped. In fact, analytics suggest that when markets pull back, active address counts often fall as investors exit the market, whereas new institutional flows tend to rebuild interest later. Notably, one commentator pointed out that despite XRP's pullback, trading volumes stayed very high, $9.2 billion a day, indicating that institutions were still very active, even as price eased. This implies the on-chain slump may be a symptom of temporary uncertainty rather than a fundamental flaw. Thus, while weak on-chain data adds to the bearish case, this can be tempered by the view that XRP's core network is still growing in enterprise use, so any long-term decline in addresses could reverse once short-term profit-taking subsides. The fourth reason is volume-based selling pressure as measured by CryptoQuant's 90-day cumulative volume delta CVD. CryptoQuant's spot taker CVD aggregates buying versus selling over 90 days. For XRP, the 90-day CVD has turned sharply negative since late July. In practical terms, this means more XRP has been sold than bought over the past 3 months. On the chart, the red bars selling volume dominate, confirming that traders have been taking profits after XRP spiked to $3.66 on July 18th in Cointelegraph's analysis. A sustained negative CVD is a classic sign of sellers remaining in control, setting the stage for further downside if it persists. Compounding this is the fact that roughly 91% of all XRP holders are still in profit at current prices. Antimony. Supply often predicts more selling. Investors often lock in gains once a token has surged. If those holders continue to sell into strength, additional pressure on price can be expected. Still, a bearish CVD can flip if buyers step up, for example, on any good news or ETF approval, or simply if selling exhausts. The CVD would stabilize or turn positive, indicating renewed demand. We saw in prior rallies that once profit takers left, new buyers came in. A healthy rally often requires that profit-taking be absorbed by fresh bids. Moreover, an interesting perspective from recent market analysis is that today's pullback is largely natural profit-taking after a major rally. In that sense, the negative CVD could just be capturing the expected pause after a sharp run-up, rather than a breakdown of fundamentals. Indeed, some experts remain outright bullish in the medium term. Surveys of analysts see targets from $3.12 to $13 this year. If that longer-term outlook plays out, today's selling might soon give way to renewed accumulation. Thus, while the current CVD trend favors sellers, it should be balanced against signs of demand coming from elsewhere. Importantly, none of these risk factors exist in a vacuum. In fact, several bullish or stabilizing developments for XRP are playing out. Foremost among them is regulatory clarity. The protracted SEC versus Ripple lawsuit, which had hung over XRP since 2020, was finally resolved in 2025. Ripple agreed to pay a penalty, and crucially, the settlement treated XRP more like a commodity than a security. This outcome, effectively, lifted a major legal cloud from XRP. As one crypto news analysis notes, the settlement reclassified XRP as a digital commodity rather than a security, removing years of uncertainty. In tandem, senior regulators have hinted they may treat XRP much as they treat Ethereum. Recent reports indicate the SEC was considering classifying XRP as a commodity. Following Ethereum's example, if carried through, that would put XRP under CFTC oversight rather than SEC, further encouraging institutional participation. In practical terms, this means more fund managers, traders, and exchanges can handle XRP without fear of security law issues. Echoing this, heavy hitters in finance are forecasting big gains for XRP once the dust settles. For example, Standard Chartered Analysts in April 2025. It's forecasted that XRP could quintuple to about $12.50 over the next 3 years, implying a 5x move from current levels. In their view, even in the next year, the price could reach $5.50 on these adoption-driven trends. Similarly, other chartists have highlighted technical breakouts that point to double-digit targets. More broadly, the lifting of legal constraints has already rekindled optimism. Institutional inflows into XRP were strong in Q2 2025, over $7 billion. Per one analysis, because XRP's utility in payments and DeFi is now recognized without regulatory overhang. In fact, trading volumes suggest institutions are still hungry for XRP financed by this newfound clarity, even as retail sentiment cools. Other fundamental positives include growing real-world usage. Ripple's on-demand liquidity, ODL, product, which uses XRP as a bridge currency for cross-border payments, has been expanding. By late 2024, ODL was handling billions in volume, over $2.5 billion in Q3 2024 alone, officially more than 300 financial institutions and counting are linked into RippleNet for on-demand liquidity. These partnerships reduce costs for banks, often cited at up to 70% savings compared to SWIFT transfers, and create genuine utility for XRP. Such real usage underpins demand beyond pure speculation. Even industry skeptics must acknowledge that XRP has carved a niche its ledger now supports. Stablecoins, the recently launched RLUSD, and is being used in central bank digital currency pilots and NFT issuance. Those developments suggest long-term demand drivers that could counteract short-term selling. In fact, the current pullback itself may even be a bullish setup if viewed contrarian. A recent price analysis noted that the decline simply reflects profit-taking after a massive rally post-settlement. Critically, the same report points out that despite the pullback, trading volumes remain very high, $9.2 billion daily, implying continued institutional interest despite the pullback. In other words, XRP is being actively traded at these levels, which often means strong hands are rotating into positions. Furthermore, seasonal and macro factors may soon favor a turnaround. Historically, August has been a weak month for XRP, whereas the last quarter, November-December, often sees powerful rallies. If that pattern holds, this August correction could be the last big break before year-end gains. And with 2025's macro backdrop relatively mild, some analysts remain predominantly bullish on XRP's long-term trajectory. In conclusion, there are at least 4 clear near-term risks that could drive XRP lower. The descending triangle breakdown suggesting a move to $2.40. The XRP BTCRSI divergence, signaling weakening momentum. Sharply reduced on-chain activity implying fading user interest, and a dominant selling bias as seen in the negative 90-day SVD. Each of these points to further downside if current trends continue. However, these risks coexist with offsetting factors, key technical supports near $3, $3.13 that might stem declines. The resolution of Ripple's legal issues clearing the way for institutional demand. Real adoption gains from RippleNet. And ODL that give XRP utility. Strong fundamental forecasts and volume patterns that suggest any dip could be bought by savvy investors. In practice, we're likely to see a tugavore. The near-term technical picture favors the bears. Any break of current supports would reinforce the downtrend. But if bullish catalysts like ETF approvals, major partnerships, or a broader crypto rally materialize, they could halt or reverse the slide. For now, prudent traders should watch how XRP behaves around the $2.95 zone. A failure here would confirm all 4 bearish factors and open the door to $2.40. If instead, XRP finds buyers and consolidates or rebounds above $3, the bulls can claim the advantage and potentially drive price back up toward recent highs.